I believe I did. Find it later.
You ready?
I'm ready. I'm beeping. Okay, so we ended off previously about actually talking about performing the professional engagement. This is actually you actually doing whatever the particular work. So in the engagement control, which is your engagement letter, are you actually going to provide the agreed service? Got to make sure you meet the deadlines, and you got to efficiently and effectively manage your time and resources. In other words, if you're going to bring on 10 new files and they're all due by the end of January, and each file takes 20 hours, are you going to have enough hours, either A, yourself or whoever, to do them all, meet with the people, produce them, and actually get them out before the end of January? So remember, especially when you're starting up there, it's like a snowball. You got 1 file, 2 files, 3 files. Okay, you can't get lost. Like people talked about, they were asking at lunchtime for billing. You can put it on a little piece of paper. But the more diligent you are to actually mark down your time that you actually spent on billable time, even more so once you have staff there, and the more rigid. You can get any type of time billing report or whatever the case may be, or just do it on a spreadsheet. As volume increases and the staff increases, it becomes more imperative that you control that time. Because at the end of the day, as I told you, the only thing you bill for is your time or your staff's time. So if you're letting hours go away, you're throwing away revenue. If you believe that I'm going to bill a certain amount of money, so I really don't care about my time, then it's going to be a little bit harder for you to grow. Mentioned to the lady like a little bit earlier, the fact is stay away from bargain price year ends. If somebody wants to do it for $300 an hour, and that's what everybody is in that area, you know what? Just get out of that area, because you cannot possibly make money doing year ends at $300 a file. Okay?
It's not a year end that you're actually doing if what you're getting is $300. There just isn't enough time. When you, we'll go through it tomorrow, when you're actually engaged and you do a compilation engagement, there's a certain amount of time that's going to be spent on the file in actually putting the whole file together without you actually having to do any real work on the numbers within the file. So there's only so low that you can go. And that's actually, to go back to what we were talking about before in billings, that's something that as you mature, you'll have some ballparks that you can tell clients. You can say, okay, well, it's a corporation that has very few transactions, and you know, but the operating company is what you're doing, but this is either a holding company, whatever. And you could say, well, our minimum fee is, or our starting fee for compilations is X dollars, you know? And then the client has an idea that, you know, if, even for a corporate tax return, what is your minimum fee? There might not be any real taxes. You know, you're not really doing any real work in the file other than to produce a nil tax return. What is your minimum fee for that? And so these things you have to establish for yourself. It doesn't really matter what mine is. What is yours? And you've got to keep in mind that you've got to buy the software to be able to produce this. The time to meet with the client, the time to print it, do all of those things. So just because there's no revenue, it doesn't mean that there's no fee for you, right? So that's
if it's not that important, if it's not that big issue, why doesn't the client do it themselves? So obviously they can't do it, they don't want to do it. So even as simple as a nil return, that's where you should have like a minimum price. The danger is the fact is, I said, if you got 3 or 4 years, even if you only charge them $150 a year, again, all of a sudden that's $450. Because if you want to even even if he wants to dissolve the company, you're obligated to file all the prior year's returns. So you may have 5, 6, 7 years of nil returns. So what are you going to do? Work on 5, 6, 7 years and charge nothing? Or only charge $100? So, you may want to compromise and say, okay, I'll charge 150 times 7. But then 7 times 150 is already 1,050. But that person cannot dissolve that corporation unless they do those steps. So the only other option, do it themselves. Or find somebody else who's willing to do less than $150. But it's your time, too. Okay, the relationship with the client. Always remember that the clients, in your standpoint, always look at them as being there for a long time. Yes, there will be one-time jobs that you're going to be doing and whatever. And maybe those one-time jobs you should be charging a higher fee because there's a specific issue or a specific time frame or a specific restraint. So normally you would have charged only $1,500 to do the file, but because they need it for that or some special emergency or whatever, it made it more than justified to charge $3,000. But you knew that client's not going to come back because you're resolving whatever that one issue is or whatever the case may be. So maintaining client satisfaction is basically, are you doing what they want to do? Are you available? And are you charging or producing in a reasonable and a financial responsible format? Are you really independent and objective? Because in theory, and then actually in practice, the more independent and objective you are, then you have no interest in there. So whenever your comments are coming out there, it is for the best interest of A, the client, or B, the end users of those financial statements. Your primary responsibility is really to the users of the financial statements. Because technically the users of the financial statements are going to do some type of whatever, review the analysis to satisfy the loan requirement, to review the analysis, to do a projection, to review the analysis, to do a merger. So they're going to be relying on that type of financial data. So your obligation ultimately is to the end user. And to achieve that, you should maintain independence and be objective. So if you do have conflict of interest, you may have to resolve them. You may have to denote them in the financial statements. If you've got a conflict of interest, if it's in regards to a compilation, you have to actually put it into the report.
Into the report. The independence is something that's, if you're dealing with audits and reviews, it's addressed in one way of you not being able to do the review or the audit if you were licensed, right? But on a compilation, the requirement is that you have to disclose it. You can still produce the compilation and you can still be engaged with that compilation, but you have to disclose it in the report. So the book actually goes through a number of different examples about independence in terms of you being married to the shareholder of that corporation. Or as an example, you having a financial interest in that corporation. I guess I could give you, yes?
Oh, I didn't mean to interrupt. When you're done, we have a question here.
Okay. So basically, I can give you one example. My daughter and son-in-law have a corporation and have a business, and they're clients of the firm. So when that compilation is produced, the report will say a partner in the firm is related to the shareholders of the corporation. So that's how that particular situation is addressed. There's examples in terms of you doing the work and addressing whether or not your independence is tarnished by you being involved. So these are all the things that you're going to have to look at. There's good examples in the booklet there. Yes.
Yeah, so a question we have from one of the online participants is around client assignments and whether there's recommendations by CGA Canada or CGA Ontario around a standard fee structure for different assignments?
Okay, I guess again we could talk about what we find is that we start off with certain minimums, and then basically, if a new client is taken on, we will actually meet with that client, review the statements, look at the revenue that they're generating and things like that, and then depending on the type of engagement, whether it's a compilation, a review, or an audit, then we would give them a quote as to what we think the fee would be. But in most cases, that fee would be more of an estimate, more of a ballpark, as opposed to a firm fee, because until you do it, it's pretty difficult to know exactly what you're coming up against. Another comment I can make, as I've already mentioned at the beginning, I'm one of the CGA representatives on the Public Accounts Council. So on the Public Accounts Council, there's 4 CAs. And on our last meeting, one of the CAs was saying that because there's fewer and fewer licensed public accounts today, these small nonprofit audits are finding it difficult to find auditors. Okay, and so these small nonprofit organizations, they're actually faced with larger fees of $10,000 and more. So you might have a very small nonprofit organization where the audit fee is very significant in relation to the amount of receipts, or the amount of grants, or the amount of I don't want to use the word revenues, but whatever it is that they're generating, right? So yeah, that's something that you'll pick up when you're practicing from other people. But we have nonprofits in our office, and they're probably averaging maybe around $7,000 or $8,000 for the year. So we're definitely charging less than what she had indicated that they're charging. But that just happens to be, the situation and the circumstances. So it's difficult for us to give anyone to say, yeah, if you're doing a compilation, it's $1,200. If you're doing a review, it's $3,500. If you're doing an audit, it's $5,000. Because there's so many factors that play into it. Okay.
Anything else?
No.
Okay.
Does anyone else have any questions? Yes. Hold on.
Hang on. Saros! Oh, he left. Hang on. We kept him here for... Sir.
I guess would the exposure, like the risk that you have, I mean, you mentioned audit that you guys are doing with non-for-profit, would that affect the fee you're going to be charging? I know with non-for-profits,
of course, everything that
sometimes.
everything that you do, you've got to look at all those factors. You've got to look at, the exposure that you're going to have, and the risk, and all of those things are a factor in determining what the fee is, right? But the problem that I was referring to is supply and demand. The less people that are able to provide that, then obviously the price is going to go up, right? And the nonprofit sector, yes, you've got the UNICEF, you've got the Canadian Cancer Society, you've got all of the large ones, but there's a lot of small nonprofit organizations, and there's still a requirement for them to have an audit. So that causes a potential problem. And she was bringing it up to council because obviously, our mandate is to designate bodies that their function is to license public accountants, right? Yes. You're going to do that? Okay, we have Piyush. Piyush will help us now.
Where do you...
Yeah, just keep it on.
Where do you find yourself, like, if a client was to say, I want you to do my tax, but not the accounting that leads up to the tax? Like, do you have any kind of conflict if they just give you the numbers to do the tax return? Do you know what I'm saying?
Yes, I do. I would have a problem because, I guess if somebody else is doing those numbers, why can't they do the tax return? Why they would have to split the two up? And if you're just getting the numbers, you should do some sort of a review, because you are associating with those numbers, even though you're not signing those numbers, right? And there are civil penalties through CRA where you're either the preparer or you're in the planning mode. So if you're the preparer and they can prove that as a CGA you knowingly should have known that something was obviously wrong with those numbers, is it really worth it, the $200 fee that you might get or the $500 fee? So I find it a little, and I mean, we have some professional accountants that might do one part and bring us the tax return, but we're really not doing the tax return. They're actually using our facilities to do that, and we know that they don't have the program, and they're very small, and
But we know
those
the,
are-
but
and
we know the
who they are.
individual.
So
We know the
generally one
individual.
comes with the other.
Usually.
Yeah.
Usually.
Remember,
Like,
remember what I told you before, or can't remember, I told the group there. The bookkeeping goes up to the trial balance. Most bookkeepers under the old system, with the fact that recently they don't want to worry about depreciation, they don't worry about year-end bonuses, they don't worry about income tax revision, they don't want to prepare a tax return, and they definitely do not want to do the financial statement, and they don't care, like as far as that goes there. So usually it's very rare, other than that maybe in a situation where the person has it and they obviously don't want to spend $1,000 or $50 or $200 to get a program just to facilitate doing one return. But like the danger is that the fact is that the more that you do the more that you don't do the financial statement and do, in this case, a corporate return, there's a greater chance that things are going to be omitted. Because maybe at least by you doing the year end, issues may have come up there that may have nothing to do from a financial standpoint, but may or may not have a tax implication. In other words, it should be added back, should be deducted, should it be added, whatever the case is. And sometimes you'll never know that until you actually do the detailed work, like as far as that goes. And it may not be that obvious by just simply looking at the financial statements.
We had a computer company that was in the same complex that we were in, and obviously we had, I don't even know if we had bought any computers from them, but in any case, we obviously would see him around or see them around. And he came in one day and brought in his stuff and said he wanted us to do the tax return. And just doing the tax return, we refused to do it. Many years later, they were assessed for not paying PST in a substantial amount, GST at the time of a substantial amount, and it's, I'm not going to build a practice if that's all I'm being asked to do, because you're not going to be asked to do it in the large cases. Obviously, that's one individual that really wasn't filing a lot of things, and he just wanted to file his corporate tax return and nothing else. But you know, it would be difficult to know whether there was any reliance on those numbers at all.
Almost got it back.
Excuse me. If you get a call from an accounting practice who are not professional, they already prepared financial statement for one of your clients and ask you to put a notice to readers on this financial statement. What is the procedure and what is your responsibility? Are you going to take this client or not?
Well, I mean, sure, you could take on a client that already has bookkeepers or that has, you're still going to do your compilation. You're going to go through your process, do the compilation, and start off with your fee as to where it's at, and then go from there. Obviously, it's no different than us CGAs working with a licensee and working on an audit, right? At the end of the day, there's the file, there's the work. And the auditor that finally signs it, it's his file, and he will go through, and if he needs more work done, if you're doing it under his supervision. So if you have a relationship with somebody that does a lot of books, and they want you to be the accountant component of that, you should still meet the client. You should still have a proper file, engagement letter, rep letter, and all that stuff. And if it's worthwhile for them to engage you, great. But you still have to do the work.
Yeah, you mean you have to go through for example, you check the accounts and you can't just trust the amount that they gave
Well,
you?
how can you knowingly that you're not associated with false or misleading information without doing the work? That makes absolutely no sense. So, I mean, I don't want to come down hard on you, but it's really like something that, you know, you can't put yourself in a situation where just because somebody says, I've done this, because people will come to you and say, you know, my daughter is taking accounting at school, and she does a fantastic job, so you don't have to do much. Well, if you don't have to do much, then let her finish it. There's obviously a reason why they're coming to you. So you ultimately, you know, if your designation is important to you, you have to make sure that you're not knowingly associating with false or misleading information.
And really, that's really the key. That's really the key problem when you do a compilation, or like I said earlier, someone just wanted to enter the information on the Jiffy.
It's interesting you just say that knowingly, but it's a pretty...
I'm sorry, I
You just
did
said
that.
knowingly you know you associate with some information is fraud, but when you say knowingly, it's something quite...
Section 9200 of the handbook.
Okay.
Read it.
Oh, okay.
Okay? That's exactly what it says.
Yeah, to me, knowingly, the term is quite, like, say,
Well, that's
high
the whole
level.
the
That's
whole
the
idea.
whole thing.
Yes.
The whole idea is, the fact is, how could you possibly just simply look at a trial balance, extrapolate that information and put it in a financial statement or put it on a Jiffy form, and don't question something that may not look right or smell right? So even though a compilation said you haven't done that much, you still cannot attach your name to something that you ought to have known or should have known, that any other competent individual would say, why would you accept the accounts receivable of $250,000 and $200,000 are over 90 days and not question to where, if they are even valid receivables,
Yeah.
and where or not there should have been a provision for bad debts, like at that stage there. So you're caught between a catch-22, which we'll talk more tomorrow.
Yeah.
'Cause that's more the actual working on the file and doing the financial statement.
When we, like Bruce said, we'll go through it tomorrow in terms of what your work requirement is in terms of going through the file. We need you to be able to, we need you to, obviously if somebody's coming to you, they're looking for credibility
True.
for you to sign that, right? Or else they wouldn't come to you. So you need to do enough work to ensure that you're not associating with false or misleading information.
Okay.
Anybody else?
A very quick question. So if somebody came to you to do a corporate tax return, are you suggesting then that you do it with a notice to reader?
No, we're suggesting that you should do some type of year-end work, whatever that may or may not be, to satisfy yourself that you got enough background information for whatever way that you get it, that if you are preparing that tax return, you're preparing it in what you believe is the most true way of preparing it.
Okay, so it
Okay,
could go
let-
straight on the
let's-
Giphy or whatever, but do some...
Well, like I said, people are trying to hide. That's why I said everybody trying to get to
Let's
this
back
spot.
up for a second. We started off today, you want to start off a practice, right? So if let's say you wanted to start off a personal tax practice, then you're going to be looking for volume in terms of producing a lot of T1s, right? And so you're marketing that. Do you believe that you're going to have a lot of demand for you to do single T2 returns without you having to do a file? I don't believe so. So the thing is, each one of those situations, all I'm saying would require for you to do your due diligence to determine whether or not you're being duped or whether or not it's just strictly a one-time thing. Because you're definitely not going to build a sizable practice for people asking you to just do T2s where they're giving you the information on the T2s.
Gentlemen, I have one question from our online
Yes.
participant. So I'm actually going to read it exactly the way it's written, just to be clear. So the question is, if I'm doing only tax returns and not issuing statements, and I'm not deemed to be in public practice, how will I be judged responsible for what is in the tax return? And he's also just included, if I do not issue statements as a rule, but do tax returns and I am a CGA, am I deemed to be in public practice?
Okay, that was addressed this morning
Okay.
through Sarosh, but I would tend to just take it to the next step and look at the civil liberties, civil penalties that CRA can impose. So the fact that you are just the preparer, there still may be a problem which goes above and beyond CGA Ontario or CGA Canada, and that would be with where that tax return is going. But for him to, I guess I would have to ask him a question and say, are we talking about predominantly T1s and a few T2s? Or are we talking about a sizable practice of T2s? So maybe you might want to get back to him and let him elaborate. Yeah.
Okay, the
So,
phrase,
sorry, one more question.
sorry, one more.
If a client go to for review to the CA form, he get the review from the CA form and
Oh, yeah.
comes to us for filing tax return.
No problem.
No problem.
No, because on the T2 return, you have to indicate who did the statements and what kind of statements and whether they were from a professional accountant.
Yeah,
Right?
yeah.
So, yeah, I don't think that's a problem. I think that specifically you're engaged to do the tax work. Yeah,
Okay. Thank you.
yeah, that's fine.
Sorry, just to follow up, it's actually, he's focusing on T2 and T1.
He's focusing, well, I really have a hard time really developing a sizable practice doing T2s and not doing any other work, because that's like saying we're just going to focus on the icing and not the cake. It's just separating the two. The bulk of the revenue that you're going to generate is from the file. So why you would just be doing a T2? I'm still a little bit I'm still a little bit confused, and I would say that he has to be careful on where that information is coming from and what type of review he's actually doing with those numbers. Yeah. Okay.
Well, the other way to look at it is why is a person who's preparing a financial statement not capable or willing to do the related tax return? What's the issue, like, behind it? Okay, just before we get in, like everything that we're talking about, which would be brought up more, it's like you're associating yourself with data. That's why when they say when you're preparing tax returns, you're offering your service to the public, so therefore you're into public practice. To avoid this issue, all I did was a jiffy. As I'm trying to explain it, the fact is, you just simply taking a trial balance and entering in to get a jiffy, and believe that you're going to do a corporate return, I will really challenge you on that issue. Because I can easily prove to you that 70% of all data entered in a corporate return requires your input. So that means you also, not only do you have to put it as far as a codification, as far as Jiffy is, where does it go on another schedule? What is the impact of it? So you put a Jiffy as a fixed asset. Is that the same fixed asset that you had the previous year, capital asset?
Right.
Is there a new addition? Is that less of an asset? Do you have a disposition? And if you do have a disposition, what is the cost and what's the accumulated amortization? What did you do or not do with the gain or loss on disposal? Which form did you fill in that actually reported that you did have a gain or loss on disposal? And you're going to find that 70% of your information. The danger is that the fact is, when you're doing T1s and you know nothing about tax, the problem is you can probably get away with a lot of it because all information are entered by a T4, a T3, T4A.
Right.
And once you enter it in those boxes, it automatically goes to a right area. Where you run into problems is where you're going to do employment.
Right.
And where you're going to be doing business.
Self-employment.
Do you actually know where to put those numbers on? Like as far as that goes there. So you not knowing the financial background, and especially doing a corporate return, you expose yourself to more risk. A misclassification, but it doesn't make any sense if you're a normal practitioner to carry it up unless you only have one file and you just want to be cheap or efficient, and not go out and spend any money to buy a tax program to facilitate one client. You're quite happy to. So then you associate yourself with another accountant who is satisfied that the work that you are doing is correct. You do ask the pertinent question that you have less problem or no problem actually issuing that one-time tax return, but that's only because you're doing it more as a favor to that other accountant, not try to generate revenues or whatever the case may be.
Right.
Okay?
Right. Any other questions regarding?
I just want to
Oh,
say,
sorry.
Yeah,
You had
it's
one.
okay. I just want to say that I know some friend of mine. They are in IT consulting business. They're just they do their own bookkeeping. So they use Simply Accounting or QuickBooks, and they just only ask for T2s.
Okay, but when you do that, as Bruce said, you are still looking at the information. They're providing you with the, with what are the additions, as an example, with that particular class. What class does it go in? And if you find that you believe that information is not false or misleading, then fine. You don't have a compilation engagement from that standpoint. But again,
you're still responsible for the liable. I mean,
You're potentially responsible.
yeah.
or potentially. So
Because-
if later on CRA find that something's wrong with the numbers,
Well,
still-
you're exposed with CRA, definitely. And from CGA's standpoint, you're making that call that you're basically, you're not involved in an engagement and you're doing a T2 return. I still say that you're really not going to grow a practice doing that, right?
Then what would be the maximum sort of a magnitude of the damages if you...
Oh, God.
2 to 5 years in jail and 200% penalty for the understatement of taxes. That's called tax evasion.
I really have no idea on. I think, you know what, you're here to start a practice.
Let's not worry about problems.
And you're here to be able to develop a practice that grows, provides you with enough revenue to sustain your family, and down the road you can sell it. You're not going to be able to include that in any format as really giving you any of those things, right? So again, we talked about these things as being unique, one-timers, specific situations. Her friend, as an example, I still wouldn't do it. Personally, I wouldn't do it. Because it's just not worth. It's almost like saying $200 or $300 is sufficient for me to be able to just pass them through, and I won't do it. So and the other thing, it's not good for them. If if anything needs to happen with their business, they don't have a record of having financial statements for all of those years. Okay.
I'll give you a little scenario there. Like I came across something and I said, okay, it wasn't right or whatever the case may be. So I thought I would be facetious. I thought I'd be quite adamant. I said, the fee was normally like to do $200 for a personal return. I said, not even if you paid me $2,000 would I do it. So I really wasn't expecting the client, 'cause I knew he was cheap. Oh, so if I gave you $2,000, you would do it? So I learned my lesson. The fact is to say, look, if you're not going to do it, don't try to quantify their limit.
Right.
It's almost like Dumb and Dumber.
Yeah.
You don't have a hope in hell, or you don't have what it was, a million years or whatever.
Yeah.
You got
Not in a million years.
Not in a million years. Oh, hang on, I got a chance. Like at that stage there. So
Yeah.
be careful of what you're saying or how you say it. If you're not going to do it, you just say no. I'm just not comfortable with doing it, and not do it.
Remember, just sorry to jump in. Remember, just as your friends that are running an IT business, they're in the business of making money, or they're in the business of running a business, so are you. Right? It just doesn't, the friendship doesn't just go one way. It has to be both. And so that's something that if you do the engagement and you do a good job, you probably will get referred to somebody else. You don't convince them that they don't need it, that it's acceptable, then it just starts you down the wrong path.
I was just going to add, doing things for friends is almost a conflict in itself, like, because you want to help them out, but you're putting your professionality at stake.
Right.
Because it's, they're trying to get something for nothing.
Right.
And they're using your friendship to get it. So.
Everybody wants free advice.
They're placing a very low value on what you do.
You're not gonna really
good.
bill me for this, are you? But I just talked to you for an hour and a half. What do you want me to do? But we're friends. Okay. And you know what? If that's the start of your relationship, then the person may not be your friend, and definitely is very poor from a business standpoint. So that's where we talk. When we talk about the conflict of interest. Conflict of interest could be with close friends or whatever, because you may not be independent or objective. Like as far as that goes there. And believe it or not, they'll play the cheap card on you. Oh, you're not going to bill me that much or whatever the case may be. Okay?
Confidentiality.
Confidentiality.
Is I don't know how many people have heard PIPEDA. There's a specific act that basically we have to adhere to in terms of confidentiality. When somebody gives you their records, you can't just turn around and tell everybody else what it is, or how you give copies out, or how you transmit the information. Even transmitting tax returns has to be transmitted in an encryption format. So confidentiality, don't take it lightly. It's very, very important. Client acceptance. You don't have to accept everything. Just because you don't have any clients, maybe the one you're going to get is worse than not having any clients. So make sure that you're part of that equation, that you determine that, this is something that is mutually beneficial. I can do this for you. This is what you're going to get at it, and it works for both. And new client procedures. If you set up the process now, it's repeatable. It's something that, even just taking information. We probably, when we set this up, we just kind of flew by the seat of our pants. And sometimes you're looking for phone numbers and you don't know exactly where that number is, or addresses change, as an example, and you haven't updated. The client shows up and you don't have the most current address on the documentation. But I sent you an email. Well, okay, I forgot, so you've got to reprint it. You've got to go through all of those things. So having new client procedures set up properly is just something that's more repeatable. The other thing is, as you grow, the more systems that you've got in place that work, the easier it is to delegate, to get somebody else to do it in your place. Right? That question?
Hang on.
Do you work throughout the year, like with the clients' bookkeepers at all? Like, do you work with them to try to make sure that they're doing their income tax, or their tax payments, their GST, their HST, their WSIB payments?
Actually, I think that's a good question, but clients come in all sorts of shapes and at all sorts of levels. So we would do what's required as part of our engagement. If our engagement requires that they bring in the records once a year, and they bring it in a box once a year, that's what we'll work with. And if it takes, if there's bookkeeping that we do within that, and they're offside with GST, we'll let them know at that time. We don't make it our problem. We don't make it our responsibility that it's the GST is due. to send them a notice and say, hey, by the way, your GST is due. Once you start doing things like that you're not engaged to do, you make those your problems. And oh shit, I missed the payment last month. Why didn't you remind me? And so I really don't want to take on anything that's not part of the relationship.
So you guys don't have any clients, so you don't have to worry about losing them. But if you happen to have some clients, the commentary is that the fact is, without how to lose them, just don't respond. Just ignore them. Don't cooperate with them. Let the owner contact lapse. And you haven't talked to the guy in 2 years. You're going to get that lonely feeling, he or she. Don't keep clients informed. When we mean like that, things that will be coming on or whatever. But as John said, the danger is, the fact is, if you start spoon feeding them or hand holding them or allowing them to show up at the last day or whatever, invariably the next time they'll show up the last day, 2 hours even later. So like I said, you got to be a little bit firm and say, look, if I don't have this information by whatever date, I can't guarantee that'll be filed on property on time. If you fail it, if it happens to be, in this case, an HST form, you may be subject up to a 10% penalty, depending on the time frame.
Yeah.
Assume that the clients are technicians. So the danger there, if you get them to do all the work there, like at that point there, you may find that they're inappropriate, they can't handle it, or they weren't expected. Because they're paying you to do a service. So what is that service that they're asking you to do? Is it simply, as I said before, bookkeeping, payroll, doing the T4s or whatever the case be? Or are you just simply doing the year-end financial statement and corporate returns?
Yeah. Or just actually assuming that because the client has made an attempt at the bookkeeping, that it's correct or that it's done. And so that's a danger in itself. And obviously, the last one is probably more applicable in terms of when you get a little bit larger, and that is to just send a poor staff and working on their files, and your staff's actually learning at their expense. You got to be able to make sure that you're still providing the service as opposed to your staff, becoming.
Plus, you got the supervision issue
Yeah.
too. Okay, we talked about earlier about independence, and this is some of the examples of.
Yeah, exactly.
So CGA owns 60% of X. CGA spouse owns 25% of X. CGA partner is owed $100,000 by X. CGA brother is a director of X, and CGA mother is a manager of X.
Okay, so how many of those are independence violations? Or well, actually, I looked at it before, and all of them are. Yeah, all of them are. Go to the next one. But basically, what you would have to take that information and extrapolate it in terms of, as I said, for compilations, indicating it on the report. It doesn't prohibit you from doing the work. Okay, here's conflict of interest.
So CGA recommends that X buys investments sold by CGA brother. CGA receives a fee for referring X to an insurance agent, and CGA advises X1 and X2 on the sale of X1's business to X2.
Yeah.
So conflict of interest. Right?
Yeah, they're all conflict of interest.
I mean, number C is your most critical. You got to make up your mind which side are you going to be on, the buyer or the seller. Because guess what? The buyer wants to pay the cheapest price, and the seller wants to get the highest price.
Yeah.
So even if you didn't think about it, you got a conflict of interest right then and there. You can't advise both of them and come up with an answer that's going to satisfy both of them. So you got to pick and choose one or the other.
There was a CGA that was asking my opinion on something, and it had to do with a tax situation, and it turns out that the question he was asking me to help him with wasn't even his client, which was really odd. And I said, well, how did you come across this guy? Well, I referred him to a friend of mine that's selling something, and I told him, go to him, he'll give you a good deal. So in the meantime, he's actually networking, he's giving advice, he's referring him to somebody else, he's creating all sorts of issues, conflicts, and he doesn't even have a client. And this guy was actually calling to find out what the tax implication was of something. Like, just made absolutely no sense. So obviously, I'd never addressed the question, and couldn't understand that somebody would get drawn into those types of situations. So make sure that whatever it is that you're involved in, it's pretty clear. You know, they are a client. They're you know, you're doing a compilation. You're doing you know, what kind of a business are they in. Have that relationship crystal clear, and not necessarily find like you're the grocery store lost leader. You got to give them something in order to be able to close the deal. You know, so make sure you go through all those processes.
We're back to revenues, eh? Billings.
Revenues.
Okay, discuss the fees and the terms up front. For a lot of reasons. The fact is you don't want to start something that you can't either A, complete, or you can't complete for a fee. Also, the fact is if you are having a client there, you got to worry about the engagement letter. So that's where you're going to quantify what you do and how you're going to do it and how much you're going to do it for. Record all your time and expenses. The more simple you are, the more less files you have, then it's probably almost easy to keep track of. I only got one client. Again, as I said earlier, even though you may have spent 50 hours on it because you didn't care about the time or whatever, you should always strive to do it in the least amount of time that professionally resolve that issue. So A, you can actually really see that you can do it in that time frame and you can bill it at your billable rate, that you're satisfied that the fee that you did charge is appropriate. Okay? Appropriate and prompt billing. The best time to bill is when you actually complete that service. So if you actually are doing a year-end financial statement, corporate return, don't be shy to prepare a bill. It's probably the absolute best time to give the bill. Don't say, I'll get back to my office and I'll mail the bill in next week or a week later or a month later. People have bad memories. You're billing these for what? Remember I saw you 6 weeks ago and we went through this, and that, and you signed off for here and there? Oh yeah, okay. And you charged me how much? Don't forget, I always say, look, if I give you the bill right now and you got a problem with the fee, be man enough or woman up to let's discuss it. Because last time I checked, it's only me and you. If I send John out there or I send the staff out there, yeah, but we had a debate or we argue or whatever, it's okay, I'll give you a little bit of a latitude. But if you're presenting it directly, there's no other buffers. You told me, you said you agree, you said you had no problem with it, so why aren't you paying? Why didn't you like your fee? Well, why didn't you tell me when I saw you that last week? Well, I didn't want to get into it right then and there. Okay, so let's get into it right now. Let's discuss it. Blah, blah, blah. Because if you don't fight for your fees, people have the tendency of not paying you.
And when you have clients with a group of corporations or a group of businesses, and you start mailing them invoices, they have a tendency to say, "Oh, didn't I already pay for this?" or "What happened with this?" and all that stuff. If you give that to them at the end of each engagement, that'll never come up, because the most they could do is ask you for a copy of it if they've misplaced it, but it's not that they're going to be confused as to what you've invoiced. So that's very, very important. Consider it taking it from A to Z. You know, you land the client, you go through the process, you determine what you're going to be doing, you wait for the time to come up, you pick up the records or they drop off the records, you go through the process, you do the file, you've got questions, call the client, you resolve those questions, if you believe that it's large enough and you should be reviewing drafts with the client, do that, because sometimes there's potential bonuses, there's all sorts of other things, dividends, there's all sorts of things that could come into play. So have a meeting with the client, review it at that point, finish the file, finish the statements, do the tax return, set up another meeting, meet with the client, provide them with all the letters, all the documentations, and finally give them the bill. And you know, and then repeat that process for next year, and repeat that process with the next client, and on and on. So it becomes more of a propulsionary, that you're actually going through the process, and it'll help you in terms of when you have multiple deadlines at the same time, being able to manage both of them, as opposed to you know, if you've got one file going out a month, it's not as stressful as if you've got 14 files going out a month, or if you've got, you know, 5 going out a week, or 10 going out a week. So it can actually get much more involved in terms of who does what, and when are you going to have your meetings, and all of those things, right?
So 4 and 5 kind of goes hand in hand.
Yeah.
Make sure the fees are fair, like as far as that goes. And I always find funny, aim for full collection. I don't think there should be any doubt. But anyhow, basically what they did in the book there, they go with, you know, like a resolution that if you do have a fee dispute, you know, like what do you do to resolve it? Like, you know, like at that stage. The last thing you want to do is go out and start suing clients. Because I'm pretty sure they're not going to continue to be your clients if you're suing over fees, like at that stage there. So, I mean, you always try to go to collections. I mean, we can tell you a few stories, but since we're being taped, I don't think we really want to about collection fees. But, you know, you may have to, do a little bit more extra dramatic way to collect them, you know, within the legal rights or whatever the case may be. But you did provide a service, and you should be paid. Trust me, if you ask my spouse, she can't understand why they didn't pay me right then and there. Like as far as that goes, I said, well, they are a business, and we do say that they are a receivable. But always remember, the danger with a receivable is the fact is it may not be paid within a short time, and it may never be paid at all. So that's your leap of good faith to go back to what you were asking before, whether or not I should get a retainer. As soon as you ask for a retainer, it's either because it's unusual, in my mind, it's from unusual circumstances, or there's a lack of trust. Because why else would you need a retainer? No, I'm just saying, well, of course, but if you, the client, don't complain about it and they're still doing it and there's no problem, I say great, but but you can't do that with everybody. That's all I'm just trying to say. Like as far as and you got to judge what to do. Question?
So we have a question with regards to fees, and another one if we can jump back a little bit in terms of confidentiality. So let's talk about the fees right now. I have a participant that's asking 2 questions. So more in terms of the fees up front. So number 1, do we accept the work, review what is involved, then provide the cost estimate? And then number 2, what is the best way to handle when you do find out later that you may have or underestimated the fee?
Okay.
Well, I said that earlier. I said, like, when you're ever doing anything, you start in the middle of it, and you're realizing that there's client problems, that is going to require more time, stop. Once you stop, try to reevaluate it's going to take you or your staff to complete whatever that problem is, re-estimate what you believe the end fee would be, then at that point, before you go any further, discuss to the client, oh, I got a problem in this, and this, because this, or this was missing, and I believe now that my new fees are going to be projected for whatever. Obviously, that will cause confrontation between you and your client. You say, you sure? I said, I'm sure. You sure is there, my fault or whatever? And then you got to re-satisfy yourself that the client's happy with that new fee. I can almost guarantee that probably 90% of the time, if you just go on, if you quoted $1,500 and wind up with a $2,500 or $3,000 fee, you're going to have a big dispute, and the odds are you may not get the original fee, let alone the increased fee. Or if you do get the increased fee, then the odds are the guy will go off to some other place there. So it's called resolution. How are you going to resolve it? The best way to resolve it, once you realize it, because you've taken that file in good faith that everything's copacetic, and it's pretty well going to be the same as last year, this year, no real problem. But as you get into it, they have bigger problems. or lack of information, lack of controls or whatever that's going to require you doing extra work because of their inefficiency. If it's your inefficiency, your staff inefficiency, you have to eat the time. You cannot bill for that extra time. That's part of the internal training. But that's how you adjust it accordingly. Okay, what was the other question? Sorry.
Actually, I'd just like to add a little bit on that. Communication is really, really important. If it's a new client, there's a tendency for people to actually get into a relationship with a client and say, you know, it looks good, it'll be X dollars. And if you've actually committed yourself to a fee, then you're going to have to decide whether, as Bruce said, if you're halfway through, you're going to talk to the client, you're going to say, okay, we have a problem here. This is what the problem is. I had no expectation that this was going to happen, but in order for me to finish this off or to continue, this is what it'll be. So it's really a matter of you being able to be clear with the client, not give them a sense of a fee that's in this ballpark, and then start giving them all the problems as you come along. So let them know ahead of time where you're going to be, and after you've reviewed it, if it's going to be more, and you know, to take it from there. Because ultimately, if they don't agree, you can finish the file, deliver the statements, and then you'll have to adjust it on the aim for full collection, because you're not going to fully collect it and not have a client. Second part?
Okay, so the second question really applies to everything that we've covered so far. The question is, if I need a mentor to review my work, to what extent does he or she have access to the client information? Sorry, I just got another question. I scrolled it down. And really, they're looking at it from the confidentiality perspective.
Okay, well, the mentor is really not engaged with the client. So the mentor is basically there to ensure that, you know, there's an engagement letter, there's a rep letter, the statements are in a certain format. They're not going to be looking at the data. They might tell you that you haven't done enough work here. Go back and do more work. But they're not directly linked to the file, nor do they want to be. Nor do they want to actually look at you know, specifics within the file. So it's a different sort of relationship. I don't think he fully understands what that relationship. Tell him to review that.
Great.
Yeah.
Okay, but I think the key word was the confidentiality information given to another party. Because remember, you said that you came up with that with the lawyers that were asking that issue.
That's a little different. No, I think the question dealt with whether or not, if I understood it correctly, whether or not the mentor was going to look deeper in the file, which would mean that the mentor is reviewing the file as if he was a partner or as if he was a junior and all that stuff. The mentor is exactly a mentor. He's just trying to help guide you to ensure that, you know, all of the things that you should be doing in the file if he's doing a proper job. Yes.
One final question, and we're jumping back to billing. The question is, what about invoicing what the work costs if more than, quote, discount to quote?
Sorry, can you read that again?
I'm just reading it word for word.
Yeah.
So the question was, what about invoicing what the work costs if more than, I'm assuming, the original quote that was given?
I guess if I read the question that you're saying is, what if the fee is actually higher than what the cost is?
Yeah, she has discount here. Maybe, Joanna, if you could maybe respond to us and give us a little bit more detail, we can maybe jump back to your question then.
Good.
Yeah. Okay.
That's a good idea.
If the question is that you quoted $1,500, but you only did what you believe was $900 worth of work, but you believe it's worth $1,500, you can do it. Or if you believe it's $1,500 and you believe if that wasn't work because you misapplied it or whatever, yes, you could say the file was actually more efficient than what I thought it was, and I'm just going to reduce my fee to whatever, $900 or $1,200.
Yeah, and you could do that. You could show discounts on your invoice if you choose to. if you want the client to know that the fee was actually $22.50, but I'm discounting it for whatever, and it's $1,900. Just as you can have on a T1, you could give a senior's discount. For whatever reason, if you want to give a discount, nobody's going to prevent you from giving a discount.
And actually, the good point to that is the fact that, remember I told you when you pick up a client for the first time you're trying to quote, you're better to say, I believe my fee will be $1,200, but a little bit of goodwill or whatever, I'm willing to do for this year to start off with for $900, but my fee next year will be $1,200.
Yeah.
Like as far as that goes there. So as opposed to say, oh, file, I'm going to do it for $900 and then come back to the next year expecting the fee to go up to $1,200. So you got to watch out with discount, because once the common, well, if you did last year for $900, why can't you do it for this year for $900? So maybe by inferring that, okay, I'm going to give you a little bit of discount because of the new client. The same idea, you may argue the fact that I'll have that first hour interview with you free, because you need that hour of interview to solicit. So you're willing to throw away an hour in case the guy never comes with you. The reverse logic is the fact is that if that person becomes your client, you're already predetermined that it's part of your overall fee. It's like you come in and say, oh, there's no HST on it, on the sale of whatever the item. Well, that's fine for them to tell you, the public, but I'm pretty sure the government still wants their HST. So what they're just doing is just backing down the numbers, like as far as that goes. Question here?
Back to the question on mentor. So,
Yes.
So would that apply to practice inspection as well, or?
Well, do you want to answer that, Piyush?
Sure.
We get other people involved.
Practice inspection is totally different as for the mentor is concerned. Mentor is an arrangement between the practitioner and the mentor directly. CGI Ontario is not involved in that. Whereas practice inspection is a mandatory process which goes directly via CGI Ontario for the practitioner.
So in terms of the files, like what are the things they look into? Is that like very different?
I think they go through this process, what you have to see in the file.
Can you give her the mic and she'll repeat the question so we have it on tape, and then we'll.
So you also touch on like say what to look at and things like that, like basically to make sure that there's a letter of engagement and things like that. Like
That's more for tomorrow.
Not so much.
If you say, well, the mentor is basically the person that's guiding you to help you through what should be in a file. The practice inspector is actually going to be more of a
Monitor.
More of a monitor in terms of saying, okay, you've got 25 files. We're going to pick and see which ones you have, and as opposed to you just giving me whatever file you want out, and then we're going to look at that file and see whether or not you're meeting the CGI Ontario requirements in order for you to continue to practice, right? So, but are we looking at similar things? Of course, because the mentor is helping you to put things in the file that's going to help you meet practice inspection, right? So, but the practice inspector is not there to say, okay, go back and you forgot your rep letter and make sure you've included your rep letter. You don't have your rep letter, your engagement letter, or your file isn't indexed. You've got a poor practice inspection, and you're going to have to deal with that. The mentor is there to say, these things should be in there. Now, the practice inspector is going to spend more time looking at the numbers as well and say, well, you know what, why didn't you address this? It looks to me that you should have addressed this. So it is different in terms of how you should treat both of those.
So if I were to pick an example, say for T2, practice inspection, you will actually go through the file?
No, the T2, all we're going to do is ensure that it's been done. That's it.
Oh. Okay.
Yeah, go ahead.
Practice inspection does not involve the inspection of a T2 return. It's just
Piyush, yeah, speak into the mic.
It's just the financial statements which are reviewed during the inspection process by the practice inspector.
Right, and I would just add that the T2 or the T1 or whatever it is, we just looked at the statements followed through. That's all. We don't actually look at the return to see, one of our one of our checklist is has the tax return been processed and filed? That's all we have to do. But we don't. There isn't a practice inspection on T2s and T1s. That's a lot to take in all at once, right? Any other questions? Okay, are we going to leave collections and move on?
We haven't got there. Collections. You got to send out those statements. I don't know why, like I said, definitely not on year ends. I never see that there, but probably what they're talking about, again, if you're doing monthly, quarterly bookkeeping, you may do it. But again, usually you got to transfer that information back to the client. At the time that you give them, they bring in records, you give them records back there, give them the bill at the same time. The danger is if you do send out statements, you got to worry about charging interest. I've been in business for 35 years. I haven't charged interest once. I have a hard enough time collecting the fee, let alone worrying about charging interest. But like I said, if I'm going to technically take them to court and whatever, then sure, then technically as you look with the review engagement letter, you have the ability to charge interest, like at that point there. But whether or not you're going to get it could be another issue. The 3-step follow-up there, in other words, you go back to the other point there. Yeah, don't sue your client because they're not going to maintain there. And you always you got to give the client access to the records. A lot of accountants believe that if I don't give you your records, if you don't pay me, well, your code of ethics says you can't do that. Okay, so that's your reverse danger. Promotion. You're trying to sell yourself. Remember we talked about that earlier about being in advertising. It can't be false or deceptive. Cannot conclude the use of harassing contact. Create an unjustified expectation of favorable results. You will get that $300 refund if you come to me. Contain self-loyalty statements that are not verifiable. I am the best accountant in the world, like as far as that goes. And as I said earlier, you can't use the title of specialist. Again, these are all quantified in your code of ethics. So when you do your web page or whatever the case may be, you are going to do a blog. You got to be careful exactly what you are putting in that blog and what you're actually talking about yourself. Obviously, you're trying to promote yourself, but make sure you do it tastefully, tactfully, professionally, and not in contravention of the code of ethics. Okay?
And there are more rules than just that. Those are just some of the ones that are highlighted.
So we're back to like setting up your practice.
Arranging financing and banking. We looked at this earlier on when I said it's a good idea for you to do a budget and to figure out what your revenue is and what your expenses are. And if there is a financial need, you can use that and present it to your local banker and possibly get set up with a small line of credit or a larger line of credit, depending on the type of business you're setting up. It's really important for you to give yourself the best possible, to put yourself in the best possible position to succeed and to take care of all of these issues. To make sure that you do have either money saved that you can draw on, have a line of credit. Usually, unless you prepare for it, when you need it, usually you won't get approved. So this is something that you should do maybe even before you leave your job. Provide them all the information that you have, what you're planning to do, what your budget proposal is, and all of those things, and set up a line of credit. And if you don't need it, great. But if you do need it, you don't have to walk into the bank and say, you know what, I need to pay my mortgage at the end of the month, and I don't have any money coming in. I guarantee they're not going to lend you any money. It's not going to work. So a legal form of organization, that's important. You've got sole practitioner, partnership, professional corporation, LLP. You've got a lot of choices. Opening your office. If you are going to work out of your house, make sure, as Bruce said before, that if you have a separate entrance, great. That works really well. If you don't have a separate entrance, make sure that clients don't have to walk right through the whole house. And if you've got family there that, it's disruptive on the family by having clients come in. So take that into consideration. It might be a good place for you to work, but maybe not a good place for you to see clients, You don't want them to go through the house and use the second bedroom, as an example, that you have upstairs and, and you've got clients coming in and all that stuff. It's not a good idea. Hiring staff, as I said before, more than likely, if it's not the first year, it's the second year or the third year, you're going to need help. One of the things that happened to me early on, when I first got an office out of the house, is I used to do a little bit of teaching for one of the community colleges, and I had to have somebody in my office because I found it just made no sense to have an office, to close the office, and go teach, and if somebody came in, there was nobody there. So I made sure that I had staff, at least one staff that was there, and the office was still open, and they were also working. Obviously, that made sense too. So you do what you can to move ahead, and teaching was something that helped me get through those years. I did that for about 3 years, until I wasn't able to do that anymore, and started doing some stuff for CGA on a smaller scale. But that's important, so you've got to take that into consideration. Accounting and control.
This is your records.
Yeah, and getting supplies and equipment, and getting insurance. Getting insurance is mandatory. You don't have a choice. You're practicing, you got to have insurance. And people that don't do things right, look at your statements. It's costing them quite a bit. When they're going through discipline and they feel that they can get away by cutting corners and all that stuff. A valuable client base, stable and profitable, operated with high professional standards, well managed, growth potential, honest clients willing to pay reasonable fees, loyal clients who will stay with the buyer.
This is on selling the practice.
I don't know. That's if you're.
This is for selling.
Oh, for selling.
For
Okay.
acquiring the practice.
So really, there isn't a lot of negative things that you could say about that. That's exactly what you would want to do. You want to be able to build your practice that you can sustain yourself over a long period of time, and then if you decide to sell, there's a CGA practice that was for sale earlier this year, and they had so many inquiries that they took all of the emails and all of the people that were interested in buying their practice and condensed it and made a list of those that were going to move on to the next level. So from that list, they interviewed all of those people and condensed it even further to a short list as those that were potential fit to actually buy the practice. So it wasn't just so much about do you have money, can you buy the practice? No, they were pretty specific. They wanted to make sure that they maxed out by you being able to hold on to these clients over that full horizon. So don't discount the fact that you build a client base, and down the road that can actually provide your retirement by selling the practice or being affiliated with your practice in a smaller way, right? There's a lot of good potentials that's there. Good?
Yep. So like this is taking in consideration that you're going to be acquiring a practice, or eventually you're going to be selling a practice. End of show. Okay.
No more slides?
No more slides.
Uh-oh.
Yeah. Yep.
I'm not sure if you can answer this question, but it has to do with legal entity.
Yes.
If I have a corporation, can I operate two entities under it? Like,
Can you
okay,
operate-
for instance, my wife wants to operate a B&B under the entity, okay? Under her
Oh,
corporate...
bed and breakfast?
Yeah.
Oh, okay.
Okay, can
I
I
was
operate...
I was trying to figure out what B&B...
Sorry. Can I operate my accounting firm under that same corporate blanket?
I wouldn't.
No?
I don't think you can.
You can't.
Not offering professional services.
Okay.
You can set up a professional corporation, but then you got to be the only, you got to be operating your practice through that professional corporation, where basically, like I said earlier, you're going to be, that professional corporation is just basically you with an entity, and your only ultimate purpose is potentially being taxed at a lower rate. Doesn't give you any limited liability or whatever. In that other corporation, if you want to use ABC Bookkeeping as a division of, and another division is bed and breakfast, since bookkeeping services is not a public practice issue, you can do that.
I can do that.
Yes.
Okay.
But not your professional practice.
Okay.
Okay? Okay, anything else? Okay, so if you look at part
One
4.
more question we have.
One more? Another one.
Sorry, just to be clear, so I can have the professional corporation, certified general accountants, and own other companies under, I guess, under that company, or no?
Okay, you have other ones? No. You
No,
can only
you
have
just
other.
mentioned about the bookkeeping, I guess, and I wonder.
Well, no, you would, technically and even financially and legally, you want to keep those in separate entities.
Okay.
Where it gets a little confusing is the accounting practice will be done through a professional corporation. So a professional corporation, there's specific restrictions as to who could have ownership and the work and on and on. That's specific, okay? Well, I think he was referring to just a generic corporation to provide for that to have consulting and bed and breakfast, that kind of a situation. Yeah. Could you do it? Yeah, you can do it in terms of corporations not having a specific function, which they used to one day. If a corporation, many years ago, a corporation was incorporated, it was specifically incorporated as an investment company, that's all it did. It was incorporated to be a construction company, that's all it did. That requirement doesn't exist anymore. But from a business standpoint, if I was your accountant, I don't know if I would advise you to do that. I would have to see what the merit is of running two separate businesses through one corporation. The bed and breakfast with insurance probably may be better to operate it as an unincorporated partnership as opposed to as a corporation. Who knows? I'm just thinking out loud now, right? So, yeah. So I hope I've addressed that for you. Okay.
Any other questions?
We have an online question, and the question is, if I have a professional corporation, do I have to have office insurance via the association?
But you should have your own office insurance, but you don't have to do it through the association.
Right.
Thank you.
All you have to do through the association is the liability insurance. The other option that they offer you is exactly what they say, options. So if you want to insure your files, like as far as that goes, for fire or damage or whatever, or you want to have the office for the other stuff there, you can do it through the association. So in other words, you're just paying one fee that covers everything, or you can negotiate with another person that will give you that coverage. The only thing you're obligated to do is just the liability, right? Any other questions? Oh, can't talk.
Just to be clear, that liability doesn't have to be bought through CG Ontario.
Which liability? The office insurance.
No. Like the what's it called? Your third-party insurance, like protects me against
you have
the
to
cloud.
buy it through.
Not through CGA though. I can buy it through any insurance company, like errors and omissions.
Oh, okay.
As long as you have sufficient coverage.
Yes.
I don't know, again, if I would advise you to do that, because for a couple of reasons. It may be cheaper, but the insurance that you buy through your association, they deal with a lot of professional accountants, so they're skilled at dealing with those types of issues. you might be dealing with an organization that isn't as skilled at that, and might find that if a problem does develop, you might not get the same
So
treatment.
my liability and errors and omissions, I should contact the CGA.
As far as I know, I thought it should be through CGA, but if Piyush says it doesn't have to, I thought it was.
I'll just jump into this.
Yeah.
Insurance is an option. Aon Reed is one of the brokers which CG Ontario has, which CG Ontario does get a discount from Aon Reed, and like for the practitioners, in case they have to insure their practice through Aon Reed. Now, it's an option. You can go to any other insurance company also, but you might not get the same rate which you get through Aon Reed.
Okay.
But don't forget, if there is a problem, like I said, the other insurance company may not have that qualification or expertise or even interest. So don't forget, if you're doing it through the association, they're used to defending themselves there.
Yeah.
Like I said, I mean, they really want to have no claim or a claim actually squashed against you, not just simply paying out a claim. Okay, like as far as that goes there. So you got to take that in consideration. I didn't know that they allow you to do the option here, but I think the only danger about going with somebody else other than the ones that are being supported by CGA Ontario, you'll go with the idea that, remember, insurance is to cover you in case something goes wrong, so you want the best people to cover you, but also that they're used to it. It's like anything else. You want somebody that's a little bit more expertise or a little bit more comfortable with the terminology. They can actually send somebody else to review your file to find out where or not you were at fault and to what degree. Because remember I told you earlier, you could have been just simply an error. You could be a little bit negligent, or you could be gross negligent. And it's only when you get to the gross negligence standpoint that you're suable. And then the question is, are you suable up to what extent? Because remember, the insurance only covers you up to what, $3 million?
I think so, yes.
I think $3 million per occurrence, like as far as that goes there. So I mean, we really don't want to talk about things going bad there, but I mean that's what you got to take into the consideration. Okay. So right now, like I said, we're going to look at part 4 about acquiring a practice or a block of accounts. This is one way of, in theory, jumping in. It isn't the albeit or the be-all answer, like as far as that goes there, but it is a consideration. So when we say a block of accounts there, let's just say you're going into another practitioner or whatever, you may only be interested in acquiring all his tax files. You may be only interested in all his review files or all his audit files or all his compilation files. You may not want the whole practice per se. Somebody just sold say, here, it's all or nothing. So when you do acquire a practice, as you remember, you're acquiring it. Yes, it is going to give you access to client there, but then you got to worry about all the whys and wherefores and all the good points and the bad points towards it. So you got to make up your own mind about what your objective is, and some might. Actually, we were very surprised with that scenario. That the fact is, I think they said there was a Toronto East office there, and they had like 29 offers. So whatever price they were asking, you can almost guarantee it's almost like selling a house. You're going to get the price that you're asking, since you got a lot of people bidding, and you may even be selling it for a premium. Supposedly these two particular accountants there were also worried about the care of their client, which is very commendable. They wanted to make sure that if they were going to sell it to somebody, not only do they want to get their high value, but they also want, obviously from a caring standpoint, they also wanted to make sure that whoever was going to take it over was going to be capable of taking it over, from that standpoint. But again, when you acquire a practice in that stage there, you're also acquiring all the staff there. And I remember I said earlier, the fact is you may not want that particular location, you may not want the staff members, or if this was a Toronto East office and you're in the Toronto West there, your staff can't or does not want to transfer all the way over to the West End to maintain it as far as that. So all these little issues you got to kind of think about before you go into it, and you got to diarize it and get into it. So we're not even going to talk about fees or negotiations or other format, but that also becomes a consideration. Usually the rule of thumb is the fact is, most of them will go for 1 year's worth of fees. But you got to be careful with the fees, because when you look at the fees there, you got to look at what are ongoing clients. In other words, what are making up the block of the clients that are going to be there every year. You got to discount the one-time engagement. You got to discount that the fact is if you're doing any consultant work, you cannot guarantee your event. If my preferred area of specialization is tax, and I have a lot of tax consultation work, when I sell my practice, I can't sell that part. That consultation only stays with me. The other person may or may not be competent, but I don't have a list of clients that need tax consultation because it's like a commission salesman. They come up when situations occur. So even though it's part of my fees, and maybe I always shake it or bake it, always have 20 or 30 or 40 or $50,000 worth of fees every year. If my total billings were $200,000, if I was buying that practice, I would discount that $50,000 and say, hey, the only thing that's recurring that I can onto are 150. Then let's look at that practitioner's record. Let's look at his collectability, his or her. Let's look at their aging of their receivables. Like at that stage there. Let's look at their history, get a little bit of background with them. Oh, by the way, why exactly are you selling your practice? Are you tired? Are you, this case here, I think one of the ladies were sick or whatever, or like as far as that goes there. Or you just have an age, like that the fact is you want to retire at that. Or as you say, if there's 29 offers going in for one practice, it may be the prime time to sell a practice. You're thinking about it, why wait 2 more years? Everybody's looking for a practice. Probably the best time to sell a practice. Okay, John, we're gonna think about that, right?
Yeah, we will. We have a question up here, Piyush. Question up here. Thanks. Thank you.
My question would be, in selling a practice or selling a piece of the practice, whatever like part of the practice you want to sell, how would you place a value on that? Is there a general guideline established by CGA or industry that would say how much?
Well, that's why I was trying to tell you. It's usually 1 year's worth of fees, but you got to quantify. Those are fees that are, like I said, basically they're going to be your compilation, your reviews, and your audit. Okay, remember what I told you before? It's a pension. If you had $200,000 worth of fees last year, you probably got a 90% chance that that $200,000 fee will repeat next year, the next year, and next year. The things that may go volatile are personal returns. You may do 350. Next year you do 330. Next year you do 370. You may lose 10, but you may gain 10. So those things go up or down as a yo-yo. So like as far as that goes there. So when you're going to be valuing a practice, you're taking a look at it. Then the other criteria, how much are you willing to pay at what time frame? If the person who's leaving the practice wants their money up front, normally there should be a discount factor. The reason there should be a discount factor is you're accepting a block of clients, but you cannot guarantee that 1 year later that block of clients will stay with you. So why would you want to give somebody $200,000 when a year later you only got $100,000 worth of fees? Usually what most people will do, if they want their full price, is that they would negotiate to take it over from a 2 to 3 year payment schedule. So in other words, if you say, we agree that we got all these clients that we're willing to take, and we agree that the value is $200,000, or let's keep it simple, $180,000, I'll pay you 60, 60, 60. So you paid them 60 up front, you revalued all those clients. If all those clients are still there, you give them the next 60. You go to the third year, the clients are all still there, you give them the last 60. Or you may want to give them the other 60 earlier to do it. In the commentary, what it says, the best way for you to probably acquire a practice is for you to associate yourself with that excellent practitioner and work with him or her for their last 1 or 2 years for a couple of reasons. A, to get familiarity with the client, and B, for the client to get familiar with you, and that Bob or Joan is still there to receive the problem, and then when Bob or Joan actually does leave, the client just don't flutter away, like as far as that goes there. So the more that you buy a carte blanche, or the more that you buy it unseen before, there's a lot of extra risk. The clients are loyal to you. As I mentioned earlier, you usually don't change your accountant, You don't change your lawyer, you don't change your dentist, you don't change your doctor unless they did something extremely wrong, they died, or they moved away. So you usually would stay with them. So that's why I said normally when you get a client, if you happen to be a young little buck or buckette and you're only like 20 or 30 years old, you figure that you're going to work to 65, you may have that client, as long as they're in the same type of age bracket, that you're 30, 35. Oh yeah, and talk about age bracket, watch out. If you're buying a very mature practice, maybe all their clients are in the same age bracket as that practitioner. So they may already be in their 60s or 70s. Are their underlying business going to be taken over by their kids or whatever the case may be? So you got to do a little bit of homework before you start acquiring a business. It's not just simply whatever the fees or whatever. So what's the mixture? What's the relationship or whatever? Never, ever, ever alienate the younger generation. Remember, daddy does give it off to son. Son does give it off eventually to grandson or to daughter or granddaughter. So if you cannot relate to the second generation or the third generation, or they don't trust you, or daddy was a real tyrant and you always agreed with them and you always told me I couldn't do it. Trust me, once daddy dies or leaves, I can almost guarantee you that they're going to switch accountants. Because they're saying your loyalty was to daddy. The other reason that they usually switch accountants is the fact that you're always going to tell daddy what I'm doing wrong or whatever the case may be. So then we go back to confidentiality. No. If you are doing, I have no obligation, nor would I talk to your father or to your mother about what you're doing or not doing. Because that would be a breach of confidentiality. So, I mean, all these things you have to take in consideration. So, yes, it is a jump start to get into it, but there's a lot of potential landmines and blowing ups and little simple analysis. Forget about this simple, the absolute true dollar scenario.
I guess just a couple of points I'd like to add. The material that's provided for you, it actually gives you an indication of what the terms of payments are. Paying 20% down, paying 1/3, paying 1/2, paying a percentage, making a flat fee, negotiating the terms. There's a checklist in here that you go through in terms of whether it's positive, negative, and providing comments.
This is under Part 4.
So basically, by going through this, it'll give you an indication of what it is that you're going to look at in terms of what you're buying. Take into consideration what is the type of ownership that they have. Is it a professional corporation? Is it a partnership? Is it a proprietorship? You know, all of these things would formulate in terms of what it is that you're going to ultimately end up paying for the practice. The other thing is whether or not the staff will stay. You know, you've got to be able to take a look at all of those things and factor that into your decision process. There's a good indication if the staff stays that there might be a greater success rate in you retaining those clients, but you can't just assume that. There are practices where staff are so integrated with clients that without the staff you would never retain the clients, and there are staffs that are so integrated with the practitioner that once they're out of the picture, the clients are already looking elsewhere, and it doesn't really matter whether the staff stays or not. So you want to be able to put some money down, but you don't want to put so much money down that you're stuck with the problem. So you've got to be able to do a lot of work in terms of and the skill set that you have. How does that fit in with what you're buying? You know, the software that they're using. Are you familiar with that software? will you be able to be up and running with that software? Do you use something entirely different and you're comfortable with that and that's not what you want to use? There's a lot of, it's not easy. It's not easy to buy a practice, although I have seen 2 practices sold. One was due to a death and the other one was due to a retirement. And it looks like the person buying it made the right choice on the surface. It looks like it worked out for them, and it worked out for the other people that sold the practice. In one case, it would have been the estate. In the other case, it would have been the actual practitioner. And you see practices for sale all of the time, and some of the dollars that they're showing, some of them look fairly healthy, some of them are fairly poor. We get letters from time to time of firms that are of size that are looking to acquire practice if we want to entertain it. So there's definitely a market for it. There is a tendency that I've noticed is that as you get older, you start getting sloppy with your clients and you start losing clients, as opposed to saying, okay, I'm at a crossroads here. What do I really do? I can't continue to service them. I'm not able to bring anybody on. What do I do? And so if you don't do anything, what will happen is slowly these clients will just start moving off. Because people need service and they need the service to be done right, and if they're not being serviced, they're going to look for somebody else.
Sure. Loyalty would only go so far. So like you said, if when you get a chance, you read Chapter 4, it'll give you the idea about actually acquiring a practice. So like you said, they do give you some, how to analyze it and whatever the game plan. The simplest way to keep it is this. What the most sellable items are simply the fact that things that are going to be repeated. So what are their year ends? Like at that stage there. Like what is the mixture? You may not like the mixture. Maybe they got too much. Maybe they got too much compilation and not enough reviews and audits. If you happen to be an LPA, so you may not be as interested. You may have to find that they got 200 files of $1,000. So it's very practical, but it's very heavily to manage, or what like as far as that goes there. So you got to analyze the staff, and you got to the fact that do they meet the rule of thumb of a third, a third, a third. Third to run the office, a third to pay the staff, and a third for you. Not that it all be it, like at that stage there. So acquiring a practice, yes, it's like a jump start, as I said earlier, but it isn't the all be it and the be all. And you also got to look at the age of the clients. Yes, question?
Yeah, actually, you may have just answered the question, but if the value of the firm is 1 year of billings, so what's the rule of thumb on profit for the firm?
Well, as Bruce has indicated, usually that firm would be a third.
Like really a third?
Well, I mean, it depends. It depends on how you run your practice, right? If you're running the larger the firm, the more variables there'll be, and that's where you end up with senior partners, junior partners, and there's so many situations that can vary. But in a sole practitioner environment, depending on I've practice inspected practitioners that do really, really well, and others that don't do that well in terms of the amount of revenue they generate and the amount of profits they're going to make. So for you, it would be to look at that firm in terms of not looking at just the revenue, but what is the staff that's coming along? What is the rent, and what is that? Obviously, at minimum, you should be able to look at their financial statements. At minimum, you should be able to start with what is their bottom line, so that you don't have to guess. Right?
But a well-run firm should make about 33%.
I would say could even be better than that.
Yeah.
you know. But
But at the least, maybe.
yeah, but again, it depends on the split. It depends on the split in terms of how much involvement you have. The larger the practice, the more you're going to need people to get it executed. The smaller the practice. So obviously, let's say if you were looking at acquiring a practice where the revenue is $75,000, as an example, that would be one sort of analysis or one sort of situation. But we looked at another one where it's $750,000, it would be different, right? Now, are you in a position to be able to buy the $750,000? Or are you in a position to be able to buy the $75,000? Or somewhere in between? So rules of thumb, it's really hard. It's hard for you to feel satisfied that you're going away with something by just seeing that. I think you need to see a lot of other things. Where does this fit? Where do you fit with it? How long is the seller staying in terms of making sure that this relationship is solidified? It's definitely not an easy process. Let me ask the class participants, how many are considering buying a practice right now? 1, 2. Good. Okay. How about we entertain each one of you to let us know what have you done so far in terms of have you looked at any practice and share some of that information with us. That might be useful. There's one there.
I actually meant a firm in Oakville, not an accounting firm, but a company, Steve McIntyre, who looks out for practices, and I talked to him about some of the requirements for a sole practitioner, and he said, you want to keep the billings around $200,000, trying to keep it as a sole practitioner or less. He said beyond that, you wouldn't be able to manage it on your own. You'd have to have additional requirements. So a lot of the things we said in here about the payment schedules, etc.
So basically, he indicated that once you get beyond the 200,000, it's not something that you should be looking at trying to take it on your own. It's a little too much.
He also said a new entrant, somebody who's never been in practice before, would have a lot of trouble buying a practice.
Okay. So 50 to 200 would probably be a good starting point if you could find something like that.
I would think so, yeah.
Okay. Anything else you want to add to that? Or? No. Did you actually go out and see anybody?
No, we didn't. No, okay. I was just inquiring as to what would entail hiring somebody to help you find a practice would be.
Okay.
So
has he come back to you and said, I have some, or?
No. What he does is once you're ready to go, he does ask for a retainer of $1,200 ish, and he charges 5%, and the $1,200 is included in the 5%, and of the value of the closing price. And then once you pay the fee, he'll go out and start doing the searches and making the calls.
Oh, excellent. Okay, sounds good. We had another guy over here.
For me, I just started to looking for the CGA magazine. I found that there's some practice for sale, so I just did some research about how much is the pricing, and considering myself, if I go by myself, and what's the clientele range I can take by myself, or if I take on a firm with employees, I will be considered after the takeover if the employee will stay in the firm. Otherwise, if the employee bring the clients away, and then there's no point for me to buy that.
Right.
So just do some research about how to.
Did you meet with anybody?
Not yet.
Not yet. Okay, great. Anyone else want to share what they've done? And
I haven't. I'm just looking into it. I haven't started, but
okay.
I spoke to somebody and just get a general idea. He told me that market price is about 1 year's billing. I don't know how realistic that is. also spoke to another fellow CGA practitioner, so she's interested. So perhaps we maybe
Excellent.
form some kind of partnership, you know.
Excellent. Comment on when you said how realistic the 1-year fees is. I think Bruce did touch on it. What you would want to do is you would want to be able to analyze the revenue in terms of what deals with year ends and what deals with tax and what deals with consulting and so you might be able to, if you were planning to make an offer, for 1 year's revenue, say for the year ends, but a smaller amount for tax, or not interested in the tax, the T1s, or the consulting work that's, say, one time. You really don't know if that's going to be recurring, so you don't want to pay for that, right? So that's something for you to do when you actually start looking at the revenue and analyze it, and have them provide you with the revenue, and look at what you're prepared to pay based on the revenue mix.
Okay. So the other question I have is, where do you go to look for practice for sale,
Well, he just indicated he contacted an individual that will look for a practice for you, McIntyre, right? And they're in the CGA magazine as well, yeah. So and usually you'll find in the CGA magazine there's people that are prepared to sell to other CGAs. They're listed there. They're not necessarily all in the Toronto area. They're throughout Canada. So, yeah, that's probably a few places. Okay. Take a look. Yes, Donna.
So we have a great question from one of our...
Ellie. Okay.
Oh, sorry. Is there someone else that
No, it's
right
you.
in line? Okay. So it's a great question from D Online. She's asking whether it's ethical for a CGA to sell their existing practice and then later go back into public practice.
So in other words, they want to sell and rebuild.
Potentially.
And she's a CGA, and she's asking us if it's a good idea.
Yes.
Well, I would think that would be something that she would have to do a lot of analysis in terms of where she is at this point in her life. What other revenues is she going to be able to get? And then I really, once you build the practice and you have a practice, it's not so easy to build it a second time. As I indicated earlier this morning, I said the one individual had a practice, sold it, ran a business, sold his interest in the business, and he's back in practice now, and he's having a really hard time. There was a gap of about 8 years while he was running that business now to get back into public practice. So he's having a really hard time. So my advice is that if you're selling and you're done with it, fine. If you're selling thinking that it's really easy to establish, well, I don't know what her skills are. If her skills are that good and she could do it, it's great,
But from an ethics perspective, there's nothing really holding her
Well,
back.
no,
from an ethics, sorry,
if her inference is to sell it, vacate for a year, and then have the intention to get those clients back.
Oh, that's very unethical.
That's unethical. And the other fact is, usually you the buyer, make sure that you have a little bit of limitation to how long you can buy, what area you can get back. You can't stop them from going back into practice, but you can restrict the area that they go in, as long as it's reasonable.
And also non-competition. You've got, I think that's what he was trying to say, is that part of selling it, you're going to have to make a commitment that there's a non-competition for a specific period. It might be a year, 2 years, 3 years, 5 years. And then there's a geographical location. So if you were actually, in St. Catharines and you're going to move to Toronto, then I don't know whether that would have any problems. But if you are in St. Catharines and sell your practice and then start another practice there, and the clients start coming back to you, you've got a serious problem. Never mind CGA, you've got a serious legal problem. You know, CGA is probably going to be second or third. There's going to be other people in line. Yeah.
Here on page 439, he said restricted covenants. To be enforceable in court, non-competition agreements must be reasonable in terms of geographic restriction and duration. For example, it would be unreasonable for you to try to prevent the seller from engaging in public practice in your immediate area for 10 years. Also, it'd be considered unreasonable to restrict the seller from practicing in the community that is considerable distance away from the purchase location. So you can't do it for a long time, and you can't do it. You can't do it like at Transit. If you went from St. Catharines to Toronto, you can't stop them from doing it.
Yeah, like you can't say you can't practice anywhere in the world.
Ever.
Right? So it would, you would, and that, now we're really getting into the legal ramifications here, because basically something like that would be unenforceable. So even if the agreement called for the restrictions to be, for you not to be able to practice in Ontario, that wouldn't be legally enforceable. Yeah.
Break time?
Want to take a break?
Yeah, how about we take a 10, 15-minute break?
Okay.
And we'll reconvene.
Okay. Hello?
They're working, it's just we're getting some static feedback, I'm not sure.
Oh.
If it's,
Okay.
so if I can steal it from you.
Yeah, you could take it and keep it.
This is where they frisk you.
No confidence. So we were hearing static. Yeah, so most of us.
So that's why we have to you can see we didn't rush it. Every time we've done it, there's usually been
The only thing I noticed, I heard I heard the, as you're saying, the static or whatever.
The static first.
Well, that odd noise, like that.
First time.
So the practice can be done under both professional corporation and the general corporation as well.
No,
Yes, exactly. Yes. Just EXT and AU2 process. I guess then you have to take the insurance and stuff.
Number one, turn the volume down. It's pretty high.
It is hot, but that's an issue, it's like just staticky. It's like, I can't recreate it now.
Also, that's missing, which makes it a lot worse. If you notice, see on this.
We don't know which one it was though, to be honest. So test. It wasn't like topping out, like it wasn't getting too hot. It was like, like static, like.
Okay.
Yeah.
Let me check.
So is there anything we can do? Like, can we adjust the channels that it's coming in on? So keep in mind that we set the levels for the webcast. We can adjust them, of course. Can we change the frequency there?
So there's a difference of 5,000, so that should be good.
Where we noticed it most, I guess, is when he was sitting down. Is there anything, you see this here, this antenna's kind of broken.
Yeah,
see this one in here? Like, is that, can that only work with that one box, or could we try putting that wireless?
That's fine, but as long as if that one goes to that, then we have to use a handheld because you can't use both, right?
No, we can't reassign this down there.
But let me know because I gotta completely change the volume on that.
Let's not change anything right now. For now.
But
is there anything we can do to? I guess we can't take this antenna off.
No. I have a feeling.
What if I just put a windscreen on there?
Yeah.
Though honestly, it didn't sound like scratching. I'm sorry.
Check 1 2, test 1 2, test 1 2. Test 1 2 1 2. Check 1 2.
They sound fine.
What's that?
They do sound fine.
Okay. Check 1 2 1 2 1 2. Okay. I'll leave Malcolm a note, and I think if he has antennas, he can bring one down and replace it. Okay, but actually, what I'll do is that could be. I'm going to run downstairs and grab some electrical tape from George. It takes me 2 minutes to do it, so.
We'll do that now. If you're back in time, great. If not,
No, but okay, but again, it depends on how you're negotiating.
Yeah, it's working. It's a legal question. Can a CPA be buying an employee? No, not really. You have to have an employment contract with that employee as a buying in terms of you can't just say CPA works for you.
And also, you're not just say I mean, they ask them to do it, but
Yeah, it's actually fear in terms of saying, oh, we've been here 4 years, and what do I do now?
Any more commentaries?
Yeah, we had one question. John
Okay.
at it, but other than that,
Okay.
me too.
Right home about?
Specific.
So when did you start with the association?
I've actually worked.
Or you got it before?
Yeah, I used to work in the business development. So I was the high school coordinator. But in PD, it's not.
Well, it's just that because we do seminars, do a lot of everything, we tend to know most people.
That's
but
right,
As far as that goes.
Yeah, exactly.
Well, that's good.
Yeah, I'm looking forward to it. Something new.
Well, the biggest trick in this is you just got to get organized.
Exactly. Get the hang of it.
Get the hang of everything, and then as long as you get prepared, like as far as that goes there. Because what you get is you're going to get a lot of people coming in at different times or whatever. You get to get things set up there. There's a lot more from the registration standpoint, asking queries. Like people, I didn't know you have a seminar tomorrow. Can I write? And they,
I had a couple.
I know, and I always said, well, the only problem we have is you've already only made up so many handouts. So as long as you have the extra handouts, I have no, like me talking to 2 more people, no big deal.
Yeah, exactly.
Donald was saying that what we can do is go for, I guess, about another hour, maybe a little bit less, and turn it into a Q&A and see what kind of questions and address those, because she obviously realizes we don't have the PowerPoints anymore. And beyond that, we can hand out the questions and they can fill out, they can start answering here if they want.
Do that too.
Okay? All right? So that question, yeah, have to do with the employee. Okay, maybe I can't sit here then. Okay. I guess maybe if we get too close together, doesn't work.
No more hugging?
Okay. There was an online question, and I'll give you the gist of the question. The question was, can you, as a CGA, have one of your employees and that employee give you a non-competition clause, that they basically, there's a restriction on whether or not they can go somewhere else as long as they've worked there. And I would say that that's a legal matter, and I doubt very much that you'd be able to get them to agree to anything like that, nor would you be able to enforce anything like that. Even in an employment contract, if you were to have an employment contract, it would depend on what it is that you're offering, and you would have to do that before the employee starts. You're coming to work for me. This is what you're going to get. This is what you're going to do, and for that, there's this type of confidentiality. There's that. So, I don't think it would work. So hopefully that should address that particular questions.
Yeah, like we're assuming that the person's coming from a smaller environment, since there's other people in Ontario, but it doesn't really matter whatever it is. You're always your reverse danger when you start up a practice and you're going to have staff members. The fact is, well, two problems. If you don't have enough files within your particular practice there, it's more than likely that particular staff member will go up to a certain point and leave because they want more experience or need more experience. So it's always a catch-22. Then the inference is, yeah, but if my clients are so dependent on that particular staff member and that staff member goes off to start their own practice or whatever, what can I do to ensure that I can protect it against that? So I think you can only put in a certain amount of very limited restrictions, but you cannot absolutely preclude it from it.
Basically, you're both subject to whatever the law is, and that is if they do something that's unethical or not legal, you have the right to sue them, and vice versa. So it's not something that you can just put in writing, and it's not the same as buying a practice and saying, well, I bought a practice, and the individual that's selling it is making a commitment that within this geographical location, they're not going to set up a practice. And so it's not the same thing. Okay?
Sorry to interrupt. The online participant just wanted me to mention, and I think you just touched on that. He said the CGA also stipulated that the employee cannot go into practice in the same geographical area for a period of 5 years after leaving employment.
CGA actually said that they can enforce that?
The CGA said that, we're talking about in buying a practice?
No, so it's going back to that employee.
The employee?
Yeah.
I really don't know what how they'd be able to
enforce it.
To enforce anything like that. I mean, we have staff and we hire staff, and if they leave, and I mean, if they contact deliberately and solicit our clients, we have legal venues that we can follow, but I have absolutely no control over them, because even if they are CGAs, Okay.
Okay. Anything else? Anybody else here?
Yeah.
Oh, Mike, hang on.
Sorry, I just wanted to add to that comment. We have had salespeople leaving us. They opened their own business. They, were supposedly, the way it was presented as our customers contacted them.
Right.
And we had no recourse. There was no
Right.
way of, and basically, I guess as far as the laws goes, as little as I know, everyone is entitled to earn a living.
Yep.
By
Right.
that, they can get away with it. So.
Exactly, and you had a right to sue that individual
Yes,
if you wanted to, right?
But would have been wasting good money after
Right,
that. So
exactly.
that's why I did that.
Right.
Thank you.
Thank you. Anyone else want to add anything? Okay.
Okay. So all we wanted to do is just to reiterate about, we didn't want to get landlocked absolutely going through the handout, because it is quite extensive and whatever the case may be, but just to give you a little bit of the overview, just to remind you that what is inclusive in the standpoint there. So part one is basically making preliminary decisions and preparing your financial forecast. Okay, this is you doing it, right? And we talked about some of the, the various points. In each one of those subpoints, it expands into it. It actually gives you flow charts, or it'll actually give you like little analysis and whatever the case may be. So I mean, if nothing else, it gives you a background to whatever you can happen. The planning, preparing plans, policies, and procedures. This is for you to actually run your practice, and how to acquire. So in other words, what is your business plan? What is your loan proposal? Like at that stage, how are you going to finance that first 6 months, first 18 months, first 2 years? I mean, unless you come in with a block of clients, or you come in that you acquired a block of clients or whatever, not to discourage you, but face reality is probably for you to be reasonably independent or whatever the case may be, unless you have a special niche, or a special marketplace that you can tap into. It probably will take 1 to 2 years that you can actually say, hey, I'm actually doing well and whatever. But it's like a snowball. In theory, it does get bigger and bigger and bigger and bigger. The main thing is watch out like a snowball. You don't mind being on the top of it going down the hill, but you don't want to be on the other side trying to stop it, because it's just going to blow you over. So sometimes growth too quickly is not that great either. So the disadvantage about acquiring a practice, especially if you don't have an established practice, is that it may be a little bit too overwhelming. So you have to take that in great consideration. Plus we told about all the pros and cons about how to evaluate on buying that there. So like I said, the preparing plans, the policies and procedures, we got into those little sub-points there. Probably the one that you won't come across, at least not right off the bat, is 2.6 is management staff, but it does bring it into the other format. Going back to the point one there, it also does remind you to the appendix 1.1 and 1.2. It does diarize into the point of the public practice entrance and continuation standards. And we did touch upon the public practice mentor program, what's involved. But it basically is a contract between you and the mentor to do something, like at that stage there. If your files are so, weekly done or whatever, then you're obligated to go through a mentor to get your files, as John says, up to standard for the ultimate purpose of passing practice inspection.
Well, meeting the requirement to be in practice.
To be in practice.
Right.
Okay.
So the mentoring part is to provide you that assistance to get your file out, although you're still not recognized by CGA as having the ability to be able to do it on your own. So that's what the mentor does, is he provides that review on those files, and then once he's reviewed that, so it's very important for you to look at your timeline, that if you need a file out by a certain date, you make sure that it's done so that the mentor can look at the file and you can complete that file and still meet. You don't want to call your mentor and say, I need this file by tomorrow. Yes, hold on, right here.
So I think.
One second. Sorry, it's being taped.
It's for the online people.
Yeah. Just a quick question, and where can I find a mentor?
There's a list of mentors,
Oh.
and it's on the CGA webpage, CGA Ontario webpage. If I guess contacting Sarosh would probably be an easier way, unless Piyush, you know how to do that.
It's on the CGA Ontario website.
Okay,
Yes.
thank you.
Under practice inspections, you can.
Yeah.
Anybody else?
One of the points is that you can see that this has been prepared by other accountants as well, because there's a checklist in here. If you look at your personal characteristics and qualifications, you've got basically 2 to 3 pages of checklist. So it's pretty detailed in terms of it's actually on page 1.3. page 1-3. Part 1, page 3. And so obviously they've gone through the thought process and hopefully trying to help you decide whether or not public practice is for you. See, the ones that are either currently working in a public accounting environment or have worked in a public accounting environment, there isn't as much of a mystery for them. Obviously, it doesn't really matter where you've worked. You understand the data, you understand the bookkeeping aspects, you understand the financial statements and all of that stuff. But the business of public accounting or public practice is not something it's something that you're learning or teaching yourself as you go along. So it's a little harder than somebody that's actually worked in an office as a junior and sees things go around and sees the deadlines and sees all of the different statements that go out and all of that stuff. And so that makes a bit of a difference. And that's not to say that you shouldn't go into public practice, but I think you should look at filling out questionnaires or looking at all these things and seeing whether or not this is something that works well for you. Because it's not, it might not be what you think. I'll give you an example. My one of my cousin's daughters is a tax partner at one of the larger firms, and she has absolutely no interest whatsoever to work on files. She's perfectly content with working in a tax department or working, working in that type of an environment. So, even suggesting that to her, she'll say, no, I don't want to work on files. So if you know yourself that well, it makes it a little easier. If you don't, and for whatever reason, as I said before, you're either at a crossroads and you find yourself looking at public practice, or you find you're not happy at the job that you're at right now, well, you don't know if you're going to like this job either. So it's good to do as much homework as you can and analyze it and take a look and see whether or not it suits you.
Yeah, and don't forget your biggest difference, the fact is, as you probably realize or will realize, is the fact is if you are an employee, you do get a paycheck every 2 weeks.
Right.
If you are self-employed, you may not get paid for 2.5 months or 3 months, if at all, like as far as that goes there. So remember, the risk that you're taking is the inability of ever getting paid or not getting paid in a timely fashion. The rewards, is the fact is that the end of the rainbow is endless. You could start right today. You may have all the contact there. You may put all the stuff there. And 1 year you come back and say, gee, Bruce and John, I got $1 million practice. And we say, great. It's not impossible. It's quite practical, like at that stage there. So the end result is endless. But before you get to something that more that you can handle or eat, you got to make sure that you control. You got to make sure that you're properly supervised. Probably take a range that's depending on the type of client that you have. You are billing between $50,000 to $200,000. You could probably be a sole practitioner. But if you got $1,000 file, that may be still a little bit cumbersome too. So it's not so much the end value, it's the combination to make up that end value, like as far as that goes there. You may have a compilation that you're charging $8,000 for. Quite possible from that standpoint there. Generically, as the fees go higher, the level of the engagement goes higher, but not absolutely necessarily, like as far as that goes there. So what you got to watch out for is the fact is, like when you start off there, is what can I handle? The whole idea is to set up the framework. Do not discount yourself too quickly and do not hold yourself back. But I try to reiterate there, and we do this from our own practical experience and the fact that we have higher staff. And if you actually really check in with those other guys, those guys called the CAs, like as far as that goes there, everybody that goes through the UFI, as John said, a lot of them don't have any aspiration or any inclination that they want to stay in public practice. And whether they're doing the public practice within their large CA firm or they're doing it in a smaller on their own or with a smaller practice. It's not necessarily palatable for everybody. If you do not like a lot of people bothering you, you do not like a lot of people handling you don't like a whole pile of different schedules, you don't like deadlines are coming from all different, not at the month end, not the quarterly end, not the mid-year one, like as far as that goes, you got deadlines coming all over the place, like at that stage there, then public practice is not your area. You're going to get swamped, you're going to get disillusioned, and whatever the case may be. So we're not here to discourage you, we're just trying to remind you the reality. So right now, probably about 2 more months from now, like in reality, at the end of October, if you were thinking about opening up an office or committing to an office or doing it, that's probably maybe the proper time of doing it. Because it will take you 1 or 2 months to really get going. By then you're into November, December, January. In theory, the cash cow or is tax season in the sense that you're going to at least get a lot of people coming in from different things. Those people may or may not give you access to proprietorships, which only would be facilitated on T1s, or proprietorships and through a sense of corporation, they'll give you access to doing year-end financial statements. Bookkeeping is an avenue to get to other work. And actually another source of good information would be inferred about it, whatever. If you're attached to somebody who does only bookkeeping services, remember, their only intention is to bring it up to the trial balance. They like to have an association with an accountant that will finish it off, in other words, to issue the financial statements and the corporate return. So you may want to start farming out or looking towards a person who truly is a bookkeeper and said, and who are doing your year-end works? Try to solicit from that standpoint, from a growth standpoint. Okay? So it's like we just want to reiterate to go back to don't forget to read the material. I mean, I don't want to sit here and start reading paragraph by paragraph because A, you'll fall asleep, and B, I'll fall asleep, like at that stage there. But there is a lot of information in there. And that information there is a little bit helpful and whatever, and don't forget to trying to cover all the bases. Like I said, I do laugh when they say about how to negotiate your fees and how to resolve problems and whatever. So it sounds like you already knew there was going to be a problem. These are all the extra steps. That problem should have been well resolved before, in reality. Make sure that you are presenting the fee. Don't be shy about it. And it probably serves you really, really well that you do face-to-face with the person that will sign the check. Because trust me, people have a problem. They will talk to you right then and there, if not very soon, like at that stage there. And you know what? It sounds really bad there, but guess what? You're in here to make money, and the only way you're going to make money is to charge fees. And the only way that you can keep those fees, as I said before, is to get a check and have it cleared. So until you get a check that goes into your bank account there, you have done nothing. You created a lot of paper, did a lot of work, had a lot of angst, met a few little deadlines, but until somebody pays you, that cycle has not been completed. And always remember, there's always what I effectively call the ABC of accounting. You got A clients that are very good, very successful. You do the work, they pay you, and they pay you quickly. You got the B set of a clients that basically do mediocre work, usually pay you on an ongoing time, but maybe within a 30 to 60 day cycle. And then you got the C sets of clients that you always have a hard time arguing with, talking about the fees, may not pay you for 6 to 8 months, but they will eventually pay you. Then you may have the D set of clients, those one-timers or whatever, that they're just constantly nothing but a nuisance to you, and then you find it. But as you're starting off your practice, you retain them because they are still income to you. As your practice matures, more than likely, you would just simply let them go because they're not worth the effort or they're not enough fees into those particular places. Because your intention is to grow. All you have to do is make up your mind is that once you get to that $150,000 to $200,000, am I going to expand? Or I'm just going to stay where I am? Am I going to join on this up and out there? And that could be your big decision. But as you grow, there is a hell of a lot more administration. John comes to me about every other month. He said, I spend a day and a half paying the bills. I had to do this or that, but I got to also pay the bill. But I'm fortunate, and as he knows and whatever, and I know, the fact is you have to do administration. It takes you that extra 5 minutes to do that, to do the bill there, but why wouldn't you do the bill? I don't have any time for it. If you don't do the bill, people don't pay you.
Even paying your bills.
That's right. But you got to also pay your bills too. So that's why you may need a line of credit. The main reason why you need a line of credit, because as I said, you don't get paid every 2 weeks.
Cash flow.
It's cash flow. Your line of credit should go up and down like a yo-yo. No, if it just stays there, then
Preferably
you got a
up.
problem.
The line of credit down and your cash flow up.
That's right. So like as far as that goes, because not everybody pays you right away, not everybody pays you at the end of the month or whatever the case may be. But you always got to at least be prepared to have at the minimum, a 3-month cycle. You open up your door, more than likely you're not going to get any money in for the first 3 months. So that's why you don't want to open up too soon, but you don't want to open up too late. Okay? So like I said, so the part 3 is like setting up your practice. That's, remind you, it's also to organize yourself. What are you going to be? Like, like at that stage there. The financing and bank is, well, how much are you going to jump into this? Do I have a spouse that can support me, that pays all the bills? So it doesn't really matter if I bring in 1 penny. Any penny I bring in is an extra penny. That's the best. Or have I built up a little bit of, like a squirrel with his nuts there, have I built up enough that I know that I can pay my bills for the next 12 months, the next 16 months, like as far as that goes there. It'd be very hard for you to start off right off the bat in a partnership, but it's not unconceivable, like at that stage there. My recommendation, as I said earlier, not that it's the all be it or the be all, it really probably behooves you to try to get experience, and then you may be able to do this in a subcontracted basis, that you're working through a public practice firm. Not to be belittling, just the fact is, how do you do it? What you're willing to do. So you're willing to do a file instead of being charged your $50 an hour, you're willing to do the 20 because you're gaining experience. How to put a file together. What's involved in the file. What's the decision factor. That'll alleviate all your angst and whatever. If most of you guys are coming back tomorrow, you thought we have forms now, we're going to have a lot more forms tomorrow to go through because there's a lot more checklists and more procedure, because this is what's actually involved in a file. What we're talking about today is just to set up the procedure to operate a public practice. The other part is, what are the nuts and bolts of the public practice? What are you really absolutely achieving? Unfortunately, all you ever see at the end of the day are the financial statement, but there's a lot more behind that, like at that stage there. So like your office location, if you're in a basic like if you're basically in an ethic background, or you're basically in a format there, and that's where you want to do that. But if that marketplace, as I told you before, are cutthroats and they're not offering a good price, vacate, because you're never going to make enough money. If you live in Brampton, you may want to set up an office like in like mid Toronto, like at that stage there. Yes, it is very convenient to do there, but if all you're doing is trying to do for fees that are not really agreeable there, why bother? I'd rather do 1 or 2 fees for $2,000 than to do 10 fees for $300. I still have to do something to make 10 something to make it at $300. I understand competition. That's why I said I feel sorry, because at this stage here, any fee is better than no fee, but do not compromise yourself. Better to say I would do the file for $1,200, but for goodwill and whatever to start off, and there's a little bit of inefficiency. I don't mind doing the first year for $900, but my fee next year will be $1,200. Are we okay with that? Okay. Now, probably in reality, once you do try to bump it up to $1,200, they'll probably give you a little bit of angst, but at least you broke the ice by saying in advance what you're going to do, as opposed to saying, yeah, I'll do it for $900, and next year try to get to $1,200 out. I can almost guarantee that will never happen. So you got more likelihood of saying I will give a discount.
Yeah, I'd just like to add to that is, probably a better way to look at is, if you were to advise a client, the client comes to you and says, I want to be able to buy a business, I bet you would have a lot of information as to how they should approach it, what they should do, what they should be looking at. These same type of principles you should be doing for yourself. How I relate to what he was saying is that you should be looking at where your market is at. If your market is not going to bear reasonable fees, then does it make much sense for you to set up there? It really doesn't make a lot of sense. So you should really have a good indication. If there's a lot of accountants set up in one area, well, you're just going to be one more supply and demand. More accountants, fees go down again. So you should actually be wanting to locate and wanting to attract the clients that will bear the most fruit for you and will give you the greatest chance of success. And as we talked about before, buying a block of accounts, that's exactly what that guy is going to do. Is if you give him his retainer, he's going to actually look around and you're going to tell him where you want to be, and he'll try to see if that volume of base exists in that particular area. If it doesn't, he's going to come back. He's going to say, no, you're not going to find anything with 50 or 100,000 or 200,000 where you want to be. But I do have them, as he said, maybe downtown Toronto. I do have them maybe in St. Catharines. I do have it in, somewhere else. So all of these things is what this is supposed to do for you in terms of helping you decide or to go through that process and make sure that you're truthful to yourself, that you don't just say, oh yeah, that's fine, I know that, and actually go through the process. Because once you've quit, once you've left your job, you've left your job. It's not so easy. Unless you have some sort of a contingency and you've got an arrangement with your former employer where you can go part-time or you can go 3 days a week. Anything you can do like that, or as I did, I was doing teaching there for a few years to supplement it. Anything that you can do to buy yourself some more time to actually build the practice is great. So that's something. The other thing that I was going to point out on part 1, page 121, there's a whole section on the mentor program. There's a mentoring sample engagement letter, the actual checklist. Okay, so you can actually go through that in detail, and that should address, if not all of your questions, most of your questions. So as I said before, this is definitely well thought out.
Okay, guys, we've talked for 6 hours. We got a little bit of comeback from you, but you got to have a few more questions or concerns. All right, has there been any particular area that we have not addressed that you thought that we would be coming across and that you haven't seen in the book?
Good.
This may be in the book, I don't know, but are there any time and billing softwares that you would recommend?
Time and billing software, is that some part of tomorrow's thing? I don't think so. Well, I would say that there's Caseware has one, has a time and billing. The one we're using in our office is really old, and it's another one of those things that we have to look at updating. But that's a good place to start to look at. Earlier on, when I started off, I remember using a calendar where I would document all of my time and then transfer that to a OneWrite system. I don't know how many people, have you heard of a OneWrite system?
Let's not age ourselves. Let's not age ourselves. Oh, God. How about carbon paper? You remember that thing?
So basically what happened is that the OneWrite system had a lot of single sheets. You'd fill out the time and then pull them apart and then put them in a box in order, so that when you went to client A, you would have all the time tickets for client A, add up all the time, and you would see the type of service. So it was more of a manual system, but you know what, it worked. So I think there's quite a few programs out there for time of billing. Does Simply have a time of billing? Simply? I'm not sure.
No.
Really, I think it's something that you would have to look at in terms of...
Usually the work and paper generators, they have time billings attached to them.
You would have to look at in terms of how much do you want to spend and how sophisticated you need. But it's definitely important. You're on the right track just for asking that question. Because what happens is that it's really, you should know how much time you put into the file, even though you're not charging those hours. And I think it's a good indication of where you're at with that particular file, and where you're at with that file next year, and so on, and you know, and where you're at with the next file. Because obviously, if you as you're building your practice, each file you're actually getting momentum, and you're building a better base, right? And you're learning how to use that software better, right? So it's important.
Get like an appointment book, and in that appointment book, not only to tell you what's coming up in that particular time, but on that day, I worked 6 hours on ABC Limited. You know, like I worked on the year end. I did the bookkeeping for the month of January to March. I mean, the smaller as you're starting out there, you're not going to lose track of time, but you should maintain it. As you get more busier, you have more clients, and yes, you should try to get it into it. You can even do it on an Excel format. It's just a simple matter of you keeping track of what you did today. All you need to know is who did what on which file to what category, because supposedly whatever that category, if it's a bookkeeping rate, if it's a year-end rate or whatever, you're going to be charging hopefully your standard fee, going back to what you think it's worth, and B, what you believe the market would bear, or what you actually quoted. So if you spend 6 hours on it, but you quoted something that was only that you can only bill out 4 hours there, and you believe that you may have been inefficient, then you would just bill the 4 hours. If you believe, like I said before, it's worth the 6 hours, then you got to be prepared to bill the 6 hours, and then have a debate with the client and saying, oh, by the way, I had a problem here or there, so I had to bill you an extra couple hours. You know, like at that stage there. So once you kind of give that person an indication of the fee, and whatever you come up different from that fee, you got to be prepared for it, but not an argument, but at least a discussion. The argument is only when they don't want to pay you at all.
A couple of additional points. Number one is you probably could get some software that'll do that function for you, even free right now. If you actually Google it, there may be some very simple programs that might keep the time. The advantage of actually spending the money and getting a good software is that once you put in the information there with a client and all of that information, it builds a database for you, and you don't have to redo it, because as we found over the years, every time you switch from one system to another, it's a lot of work. When we switched to Caseware, it was a lot of work. It was a lot of work. We spent a lot of years doing our financial statements using Excel, and you know, we had a really good system. It worked well, but we found that we couldn't get any further. We couldn't grow. We couldn't. We had to change. So when we switched to Jazzit to do our financial statements, it probably took a good 2 years to go through the whole process to really get a lot of benefit out of it. So for that 2 years, it was really tough on us. We put in a lot of extra time just to get the stuff out, because there was always that tendency to go back and do it the old way, because, well, it's right there, right? So you had to kind of prevent yourself from doing that, right? But now it's worked out really, really well. So that's the advantage of spending the money and getting a software where it works well. Once you build that database, it saves you time down the road. And there's a question online, right? Ellie?
Yes, there is. So This question is from Dee. Her question is, to help sustainability of the professional accounting practice, would there be a possibility to request legalizing all accounting-related services to the public, be provided only by registered practitioners of regulated accountancy bodies? She's talking more specifically, so when she says accounting-related services, so she's talking about like tax preparation, bookkeeping, that can be done by anyone.
Okay, the straight-up answer, it'll never happen. Obviously, the problem with that is that there's a significant amount of resistance to just have the restrictions for public accounting with audits and reviews, because those restrictions don't exist in the rest of Canada as they exist in Ontario. So if anything, things are moving the other way, not in the restricted format. And the other thing is there's more groups than just CGAs, CMAs, and CAs. There's RPAs, and there's certified bookkeepers, and there's all sorts of situations. And it's very difficult to mandate. You would have to get the government involved, and the government would have to decide, yes, this is what you want, this is what we're going to give you. It would never happen. You want to add to that? No? Okay.
And don't forget, you cannot restrict a person from the right to earn income, and that's under the underlying principle. So if a guy wants to be an unlicensed, like unsupervised, undesignated person, you cannot necessarily stop them from offering type of services, but you can attack them if they're issuing financial statements for reviews, like the Public Accounts Council. You can actually go after them because they're not conforming to the laws of Ontario.
See, the compilation engagement, I'll address that in a second. The compilation engagement, or the wording for a compilation engagement in Ontario is something that you don't have to be designated to be able to use that wording. That wording is available to anyone to be able to produce a statement and use that wording. So the restriction, as I said before, is with reviews and audits for public accounting. That's where you need a license. The restrictions you have as CGAs is that CGA Ontario has the restriction to practice, and you must practice under these requirements. Okay?
Now my question is regarding for the immigration purpose, like immigration permit, they have restriction, nobody can, if they don't have the license, they can't do the immigration work. Over there, the employment income principle is not applicable over there. Then why they are not restricting in the accounting practice?
Well, I think I get the gist of your question. I think what you're doing is you're relating what's happening in immigration to the accounting practice, right? Again, I have absolutely no pulse on what the government will or will not do. You can ask, but that doesn't necessarily mean that they'll do that. And as Bruce said, in the handout here, there's a section that deals with how does public accounting look in BC? How does it look in Alberta? And how does it look in Ontario? Go through that, and you'll see that it's not the same throughout all the provinces. Maybe down the road, if all the designations become one, maybe the government would extend the public accounting or the public practice to include a wider horizon. But the way the climate is today, I don't think you can get the three bodies to agree, let alone to get the government to support them. And there's other people that are providing these services right now that you would have to address. There are non-designates providing accounting services, bookkeeping services, and tax work, and the government has no intentions on forcing them not to provide that.
Thank you.
Any other comments or queries? Well, people, we're going to have to give you like a little test as part of your requirement, like at that stage there. So like, this has a combination that, even though I'm very proud that you're still here at 3:30 in the afternoon there, I don't really know if you actually did or did not listen to us or whatever the case may be. So part of the requirements also, they're going to give you like a little question that you're going to have 16 questions, and basically they want you within the next 24 hours just to kind of respond to it. Most of the stuff there, actually, I can almost tell you 100% of the stuff is exactly in your handout material, like at that point there. So it's also a little bit test to see how your researchability is, like as far as that goes there. You have to achieve 75% or 12 out of 16 to say that not only have you attended the course, hopefully you've got something out of the particular course. Okay? And that's also for the people that are online there. They have the same idea. And then as Donna says, for those people and yourselves there, you can scan it and email it in, or you can fax it in.
Or you could bring it back tomorrow.
No,
for those that are coming
it's
tomorrow.
got to go to the office.
No, Donna said she
did
could
she?
bring it here. Right, Ellie? Yeah.
Okay. You can give it to Ellie tomorrow, too.
Yeah.
Okay? So I'll just hand these out there, or you do that?
Yeah. So basically, what I'd like to do is see if we can have some sort of an interaction. There really isn't a lot more that we can say about starting your practice that we haven't already repeated more than once. So hopefully, if you've got specific questions that you want to address, we can do that. Take a look at these questions. If you need, if you've got some questions for us regarding those, we can address them as well.
No, we can't. It's a test. So like as I mentioned earlier, your baseline expectation of what you thought you were going to get today and what did you actually did attain. Like we're here to answer the questions that the fact is, well, I really thought you'd be talking about this or get into more depth. Is there any of that type of subject matter? But like I said earlier, and I'll say it again there, I do like you talking to each other because that is the beginning of your networking, and that's very, very important, and that's very, very positive. Because guess what? You guys are all in the same boat. So you have the same concerns, the same aspirations, you know, the same doubts or whatever. So like I said, it's good. Well, I came across that situation. This is how I handled it. Or this is how I researched it. So give yourself each other cards or phone numbers or whatever, or your email address. I always got to keep on saying email. Like at that stage there to keep this contact. For all you guys coming back tomorrow there, we're going to go through the process of actually putting files together, both from an administration and from a technicality standpoint. So that may be of help and useful to you. But your best experience, or the best way of doing it, is actually working with something live and something with somebody else there, because you gain a multitude of experience from that standpoint.
The people online have the questions already, Ali?
Yeah.
Okay, good.
Nothing on the cards.
I did. I handed one out.
Okay.
I turned my mic off.
Better too.